Live with it. Mic check. 1 2 1 2. All right. So we're gonna pull up the chart. So this week was just so really just sweet. I ain't even gonna lie to you. Like it was so sweet. Just but you just have to understand learning these ICT concepts because once you I feel like ICT concepts are literally the best because let's just break down order flow. Let's just start from Friday. Like it was just and I didn't trade Friday, right? But let's just start from Friday, right? Before I start, let me just make sure the YouTube could hear me before I start. Because last time I went live on YouTube and I was talking and then you couldn't hear nothing. So let's see. I was talking and then you couldn't hear nothing. All right, so we live. All right, so let's just start with Friday. Bro, look how sweet Friday was. So this line buy side at 8:20 at 8:21, right? It's basically the 7 a.m. high and the 7 a.m. low. Usually I chart that out. Usually I chart out the 7 a.m. high, 7 a.m. low for liquidity zones, right? Also, if it's coupled with sell side liquidity or whatever like that, right? But let's say I don't have nothing on my chart, right? So now just look how perfect these levels just work using these ICT concepts. So now this gray zone, this is my trading window, right? It's from 9:30 to 12. That's my trading time. So now look, we have this low right here at 729, 725, which is the 7 a.m. low, and then we have this high up here, right, at 821, which is the 7 a.m. high. Market opens right here, consolidates. So look, market open, consolidates, consolidation, consolidate. So we consolidate a little bit for the first what 15 minutes all the way. So we got the sweep at 954, right? So before then, what did we get? We only got one small fair value gap right here. So you see, we just back and forth, right? We're back and forth, right? Now we sweep it at 955. This is when, this is why I say if there's no sweep, there's no trade, right? But it's using, I'm only talking about using ICT concepts, right? If there's no sweep on liquidity, buy side or sell side, there's no trade, right? So now, if you look closely, we sweep it out here. We come down, right? We create a bearish fair value gap. Let's just, and you see how I extended it all the way through, and you see how the levels are. It's still holding. So let's, all right, right here. So let me delete the first presented, but I'm gonna leave it because you see how it's actually holding. So right here, we create a bearish fair value gap right here. Yo, look how perfect. And this, the whole week been like this. All right, we create the bearish fair value gap here. So 955, we sweep this buy side right here, right? We come down, we create a bearish fair value gap right here. Remember, a fair value gap is a 3 candlestick pattern to where the first candlestick wick and the third candlestick wick do not touch, and in between it leaves a gap. Now we come down, we hit the gap, right? Expand lower. Now, what did we do? Right? We swept out this low. Cool. Usually what you want to see speed, right? If we're targeting, once it sweeps out the first end, you want to see it go down to the opposite end, right? So once it sweeps the 7 a.m. high, now you're looking for it to sweep the 7 a.m. low. If you're biased, if everything is correct, right? If you're targeting buy side or targeting sell side, right? So now look, it sweeps out here, right? It comes back up, touches this bearish fair value gap again, and then displaces lower. Then, so what happened? We sweep out this low. Usually, like I said, you want to see speed. So we didn't get speed. But what did we do? We ended up putting right back to the bearish fair value gap again, coupled with this first presented. And then we displaced lower, sweeping out these lows, right? So let's say I would have went short right here on the touch, back to the first presented fair value gap and coupled with this first CB right here. Stop loss, what would have been where above the fair value gap. Now look, that's 30 points. If you had one contract, 30 points would literally be what? uh 30 times 2, it'll be $60. Targeting where? The low, which is what which will be where? The 7 a.m. low. Look at that. That's a 8 point R&R trade. Risking only 32. So you're risking literally 32 points to make 264 points. This is just Friday, bro. I'm gonna break down the whole week. But look how perfectly order flow. Look what happened. We never disrespected nothing. And then what happened after that? So that's the short. Now look at this. We sweep, we come up, we come back down, right? Now the 10 a.m. macro, remember, it's a 1050, the 1050. So it's from 1050 to 1110 macro, which will be right here. So we come up, come back down. We don't sweep out this low, right? We come back up, respect this inverse right here. So you could have potentially caught your first long here, but you probably would have got stopped out. That's why you're supposed to put your stop at the low, right? But sometimes the stop at the low is too much. So that's why it's okay to get stopped out sometimes, but don't be afraid to get back in if you know the direction. So look what happened. We don't sweep out this low. We come up in the middle of the macro. We come up, we come back down, respect this same inverse fair value gap right here, coupled with this bullish fair value gap that's right here. So look how it's the bullish fair value gap right here that he left behind. And then we create, which is my favorite play, which is a bullish breaker. Look at this, low, high, lower, low. Once we close above here, look how, I'm going to keep saying it, look how we stay in the upper half, right? We don't have the willingness to come in the lower half, and we expand, creating a change in the state. Look how we come up, respect the wicks, OB's wick, and look how it just rallies above. Now let's break this down. So let's say long position. Let's say you would have went long here off of this first touch. No problem. Your stop loss would have been like right below the fair value gap, right here, right? You would have got stopped out. Cool. You would have got stopped out. But look how much points you would have caught. Man, let's zoom this in. Because look how much points you would have caught if you would have just caught this quick move. So, mind you want to wait on the retest. So it runs up. It comes back to this inverse fair value gap. Let's say we get our long right here. Stop loss below. So look, we're risking 21 points at the high. Look at that. That's 100 points. That would have been TP. Now, you know what happened? It pulls back. Cool. Let's say you were trying to be greedy and let it ride all the way out here. You damn sure that's 100 points. You should have took some from here to here. In 2-3 candles, 100 points. You should have took some. That's why you want to sell some on the way up. That's why I always sell some 50 points. Because with one contract, 50 points, that's $100. Right? So if you have 5 contracts, just do the math. So it pulls back, cool. You would have left probably like 1 or 2 runners. It came back, stopped you out here. No problem. You made some money here. Or if you just have somebody break even, cool. Or if you didn't sell none, it is what it is. Came back down, didn't sweep out this low, disrespected this fair value gap here, cool. Came back up, that's when we create the bullish breaker. Once it comes back down here, we could have caught our long. Let's say it hit here and you're still being patient. You're like, okay, no, I'm gonna wait a little bit more. Wait a little bit more. When you're waiting on that bullish breaker, right? So you want to jump in here off that bullish breaker. Remember the bullish breaker? We have a low here, high, lower low, because it's lower than this low, right? Once you get above here, higher high, come into it, rally above. And we have a mitigation, right? A mitigation is literally when it don't make that lower low of the breaker. So we have this low, this high right here, and then we have a higher low, right? This low is higher than this low, so it didn't make a lower low. A lower low would be it makes a lower low from here, and then it makes the higher high. So a mitigation is literally this low, high, higher low, and then up here, once it closes above this candle, which will be here, you see how it just stayed. This is what I mean. The bullish breakers, the one that really work, bro, is going to stay in that upper half, bro. It's going to stay in that upper half. If it disrespect this bullish breaker, bro, that's why it's best to just leave your stop right here. And look what happened. It rallies above. So let's see how much points that was. And this was Friday. Let's see, we would have caught the high. 200 points. Let's say you would have been risky. But it's no point on letting it ride up here because the target was here. So look at that. You could have caught one trade, two trade, three trades on Friday. Now look, let's go to Thursday. This day was just, oh my. And this is just charting the 7 a.m. high, 7 a.m. low. Right. This ain't no understanding where buy side, where the higher time frame buy side is. That's just other confluences, right? This is just looking, this is not even looking for the midnight open. If I put all the other confluence on the chart, you'll be like, damn, that's this shit literally. But I'm just leaving it clear cut right now. Just targeting 7 a.m. high and then this 7 a.m. low every day. So now look, market opens here. So matter of fact, hold on. Before we do that, you want to chart out the 7 a.m. low. Okay, we 7 a.m. low is here. You always want to look for the 7 a.m. low, 7 a.m. high. Right. That's just one of the confluences on top of everything else that I look for. Right. But these just are like the main things I just wake up and I just chart 7 a.m. low, chart a 7 a.m. high, and then I look for all of the other things. And I look for it to make sure it's in and the best trade is when it's in confluences of what I'm actually looking at, coupled with the 7 a.m. low, 7 a.m. high. Anyway, so the 7 a.m. low is here, 7 a.m. low, and the 7 a.m. high. It's the highest high after 7 o'clock, so it'll be here, right before the market open. So let's delete the zone here, whatever that is. All right. Make sure y'all can see. I gotta zoom in more because when I be watching on YouTube, I actually like when they be zooming in so I can really see what they be looking at. All right. So market opens here. We sweep out the 7 a.m. high here, right? Cool. We come down. We don't take out the low. That's why it's important to be patient, bro. When you be patient, bro, when you be patient, it literally changed the game. So we don't take out the low. It pulls back. Now you probably could have got stopped out. This is why you want to wait on retests, right? You don't, that's why sometimes you really don't want to just get in because it just displaces lower. You want to wait on a retest because this is why I didn't take this. This is why I didn't take no play except for like down here because up here it didn't give me no entry. So now look, comes up. We do create this bearish fair value gap. As you see here, we didn't get no retracement back into it to go lower. So it's cool, no trade. We come up, we create the bearish breaker, right? Which is a high, low, higher high, lower low. But you see, we never got no real retest. Like if you zoom in closely, because this is the play I was watching. You zoom in closer, you see how it literally stopped right here. It didn't go into this bearish fair value gap. But that when it don't do it, that shows signs of weakness. But still, I didn't get in and kind of being patient. It just dropped. The only play was right here, this fair value gap that it gave us right here. It was the only entry. This fair value gap right here. And you see, and this is what I mean. You gotta learn order flow. Like look at the order flow. Bearish breaker, we don't retest. We create an order block here with this down close candle. The most sensitive part of the order block is from where? The low wick to the opening price. If you extended it, look how perfectly I just didn't take it. Anyways, because I was being more patient. Look how it just goes lower, goes lower. Now we have another breaker, right? We have a high here, we have a low, we have a higher high, and once it closes below this lower low, which is a bear, that's why the breakers literally for me is like the best plays. So we have it's the lowest here. Look how perfectly. But you see, we don't get a retrace back into the breaker. But where do we get a retrace back into? We get a retrace back into this bearish fair value gap here. So that's why if you learn order flow, even if you late, you can still boop. So this is where I got my short at. This is where I call my short right here. Because once it took out this low, we just kept creating order blocks to go lower and lower and lower. And you see, it just dropped 1,000,000 points. So now this day, so this was the look at this day. So the delete though. 7 a.m. high is so look for 7 o'clock. 7 o'clock is where? Bottom right here. So the highest high before the market opened was literally up here. Boom. 7 a.m. low is literally right here. It's the lowest low. So this 7 a.m. right here. So the highest high will be up here, and the lowest low is down here before market opens. Look what happens. We swept it out literally right at market open. Then we got bullish order flow. Look at the breaker right away. Low, high, lower, low, higher, high. Look how it comes in. It just happens all the time. The last series of bullish candles. Hold on, I'm gonna make it more clear in a second. The breaker is always the last series of the bullish candles. All of these is the bullish breaker. Look how it opens. It comes into it right here. Look at, remember, the wicks tell the story, but the bodies, right, do the damage. I'm sorry, the wicks do the damage, but the bodies tell the story. Look how it comes to the order block here, coupled with the bullish breaker, order block here, and it just rallies all the way up. Just, and then look what happens. We create the same thing, a bearish breaker. High, low, high, high. Once we get below this low, you see it just drop. It just every day. This shit is crazy. That's Wednesday. Look at Tuesday. Look at Tuesday. 7 a.m. where? So it was 7 o'clock. Right here. 7 a.m. high right here. Look how that look at it. It opens. It opens, sweeps it, bearish fair value gap. Look how it drops. Hit it to the T right here. Just drop all the way lower. Another change in the state. Drop all the way lower. Look how much points that was. You would have caught that. 300 points. The more you learn is the more you earn. Look at Monday. Monday was so sweet. Easy draw. Easy target. 7 a.m. low, 7 a.m. high. Same shit. Look how sweet that was. Bullish breaker. We sweep the low. Right. We swept the low here. Just remember, no sweep, no trade. Sweep. Right into the breaker. Low, high, lower, low, but higher, high. Order block all the way. Like, this shit is crazy, dude. This shit is crazy. Like, I literally went like I'm like on a 15-day winning streak. Like, this shit is crazy. I literally don't remember the last time I lost. But anyways, man, that's all I wanted to do. I just wanted to come on here and give a little sauce, man. If you like this video, man, just give a thumbs up, man. Just like this motherfucker right quick and follow your boy. But yeah, that's it, man. That's how sweet that shit was. I got 2 niggas on here. Anyone of y'all got any questions before I hop off? Cause that shit was just too sweet. I just wanted to come on here and show y'all how sweet this was, man. That shit crazy. So let me show you some stocks I'm looking at right quick on my investing side. Cause you don't only want to day trade, right? So remember, there's 4. Let me just keep it going because it's Friday night. It's 4 ways how to make money in the stock market, right? Right. Which is the first way is day trading, right? Day trading is the first thing. That's why day trading is the hardest thing. Right. He said, do you ever trade a silver bullet model? Hell yeah. So I trade the models when it's like mixed into what I'm looking at, right? But the only time I trade the silver bullet model is like, let's say, what is that? The first fair value gap after 10 o'clock, right around there, some shit like that. After the macro, something like that, right? But I only trade that if it's like if I didn't catch no trade in the meantime, and I see the silver bullet like time appearing, and if I see it live, then it's like, okay, yeah, I'm gonna take that silver bullet play. You see what I'm saying? Yeah. So, but I really just stick to my strategy, right? Like I just broke down my strategy to y'all just now. If y'all just saw that, right? If it ain't no sweep, no trade. Right? If it ain't no sweep, no trade. Right? So let's just go back to it. You seen all the plays I showed y'all, right? Just now. I just ran down the whole price section. It was always a sweep first. Right? Like, look, swept. Like this Friday, look, it swept 7 a.m. high, and then it gave the perfect order flow. Right? Same thing. Sweep first. I just broke. If y'all coming out here late, just rewind it back to the beginning because I broke down all of this. Sweep first, then it did what it needed to do. Right? Sweep first, swept first, then it did what it needed to do. Every day is the same thing. Sweep first, then it did what it needed to do. And every single day was multiple 400, 500 points. But anyways, let's go back to the investing side. So there's 4 ways how you make money in the stock market, right? There's day trading, which is the hardest of the hardest. Day trading. Other thing, swing trading. That's why you want to learn. That's why your strategy should be the same on day trading. You should use the same type of strategies on the higher time frame. Because that's what I do. You want to start on a higher time frame, and then you go down to a lower time frame. So my same strategy is going to work once I start swing trading. You know what I'm saying? And then because look at these levels right here. This is Oklo. You go to the daily. Like, look how perfectly it pulled back to the support. Remember, when it breaks out resistance, it turns to new support. Look how perfectly. And we had got what? A pin bar. We got a pin bar right here at support. So this could be a good swing trade. See what I'm saying? And then you want to what? Invest. Which is you want to buy shares of the company. This is a good buying zone. Look, it just dropped. Look how much that shit like 50% from all-time high. Like look at that shit. It just ran up all the way to 100, then at $200, 194, and it dropped all the way to $88. That's 58%. That means it's on sale. You want to buy that because at support. So I'm saying, look at Tesla. Tesla actually broke its resistance, but you see it's still holding this trend line right here. Nvidia, same thing. It still got hella support. Anyways, so you want to master day trading first. Look at Palantir. Look how perfectly it came right back to the support zone. This is a buy. This is swing trades right here. Look at that shit. Should drop 30% from all-time highs. It's a nice swing trade. Anyways, learn how to day trade, which is the hardest thing. That's why it takes so long. Then you learn how to swing trade. Day trading is literally like a job because you're sitting here making money. Like sitting here, you're literally pressing that button to make the money. Right? Swing trading, you press the button one time and then that's it. It's like you set and forget it. That's why swing trading is kind of like the best. Well, investing is the best, but swing trading is like second. And then third thing, like I said, is leap trading when you're buying options for multiple months, right? And then the last thing is literally buying shares of the company, right? Those are the 4 ways on how you make money, or how I'm finna make money out of the market. So that's it, man. I just want to come on here and just put y'all boys on some sauce. Let's get it. Catch you on the next one.